The basic way that economists think about growth is how the size of the economy is getting bigger. For example, that's often measured by something like gross domestic product or GDP. The key thing about improving growth, which makes everybody better off on average, is if you could have more output per person, and that's productivity. So if you can get more output for every hour somebody works, then that actually expands the size of the economy without needing more people or without needing the same people to work harder and work more hours. You think about what could generate more productivity growth in the UK. I think a lot of that is making long-run investments. So one of those is skills, a second is more general investments, and the third would be in innovation. Basic problem has been, if you like, a lack of investment. So we've had very slow growth of investment and capital, which helps our productivity growth. And there's several reasons for that. Two big reasons are the Brexit vote and the leaving the European Union. So that effectively put up a lot of barriers with our closest trading partners, reduced trade, therefore reduced productivity. The second thing is also just a lot of political uncertainty. So we've had many changes of governments, many changes of government ministers, many changes of policies. And from the private sector, from a business point of view, investing when there's a lot of uncertainty and you don't know what's going on, it kind of makes people pause and not invest. So those are two really important recent things why UK investment and also productivity growth has been low. For an economist, really, it's can you get more productivity out of the people that you have without them working harder but working smarter? Because if you can do that, you raise the overall size of the economic pie, and therefore you can increase people's wages, or you could also increase public services, so you could spend more on health, on education, other things. And also it would be easy if you want to do redistribution, if you want to particularly put more money in the pockets of people who are worse off. It's much easier to do that if the economy is growing. So for all those reasons, productivity growth is absolutely critical to improving the well-being of people.